All right. Good morning, everybody. Hope you guys had a safe week. So in today's video, we're about to obviously go through preparation for the coming week. And as always, right, to get started, we always look at the economic calendar to get a feel for what particular days could give us strong expansions potentially. Again, I want to mention this right off the top that when you're looking for higher time frame moves to take place, like if you're looking for something to attack a higher time frame objective, you're going to definitely want to consider the economic calendar, obviously, because just like how macros and kill zones and stuff like that works on the lower time frame, the higher time frame uses the economic calendar, right? So say you want to see a higher time frame fair value gap get attacked at some point during the week. Well, on the higher time frame, it takes institutional sponsorship to get us up into that level or down into that level. Using the economic calendar and knowing which days have very specific high impact or medium impact news events, that can assist you, especially if you use this logic with Power 3 as well, and you understand each day's role inside the weekly range. And if you don't fully understand the weekly range, daily ranges, so on and so forth, I have a Power 3 video that talks about that, and obviously Power 3 as well. So definitely check that out if you haven't already. But yeah, so what we see here is on Monday, we have Monday and Tuesday, we have a couple red folders. So it may be kind of fruitful just to see what happens. So we'll see what happens when Powell speaks. Should be fireworks as always. So definitely consider being very patient. Don't overdo things. And, be aware. Because whenever he even says anything, before he speaks, during his speech, and after his speech, there's a bunch of random stuff that happens. Or a bunch of, not random, but very aggressive manipulation occurs. So be very cautious. On this day, if you do trade, I suggest you trade with half risk, knowing the elevated risk environment. So just consider that. And then the rest of the week should be fairly simple to trade, depending on what we see the reaction is from the Powell speech. Okay, so you'd want to note each of these times, because again, just like how macros work on the lower time frames, the economic calendar, you can consider you can consider the economic calendar as macros for the higher time frames, what I'm trying to say, right? So yeah, that is what we see for the news. So as always, our next step is going to be looking at the bonds and yields. Okay, so let's go to the weekly on the bonds. The yields. Remember, the yields push DXY in particular level or to particular levels, right? So if the yields are going lower, generally we want to see the DXY go lower. And then as a result, obviously, we'll see the indices go higher, right? And then vice versa. If the yields go higher, the DXY should go higher reasonably, and then we'll see the indices go lower, okay? So just looking at the yields here, we've been calling for lower prices for the last couple weeks. So even as far back as May, we were talking about this from this fair value gap, right? And it's been on point the whole time pretty much. Just pressing lower. There has been times when there's been a cracking correlation around specific news events like FOMC, NFP, so on and so forth. But even then, we've been able to navigate live given our intraday navigation tactics. But like you see here, I want you to ask yourself what stands out like the most when you look at this chart. All right. Remember, price can only do one of three things. It's only going to attack some form of liquidity, and I have a list of those important liquidity pools in my private community that I give out every month, so you could know what's important. Part of that is obviously previous day's high, previous day's low, London high, London low. So definitely, if you haven't already, applied this into your process, study what the previous day's highs and lows do and the London's highs and lows, and see how those levels are used, right? And how they're drawn to, even if price is on its way to a higher time frame objective, like maybe a weekly fair value gap or something like that. Observe how those things respond. Like how are they used during the delivery, and how are they used to set up that delivery, right? Again, you merge that with the economic calendar, right? If you want a higher time frame move to take place, you want to make sure you're focused on the economic calendar and what day and time that should give us volatility. Because again, the economic calendar acts as a macro. Okay? It acts as like a macro for the higher time frame. So it assists you in timing. So again, what do you see here that stands out to you? Well, for one, at least for me, I see that there's an S&T here that I want to pay attention to. Nothing has changed in the bearish bias, so I don't feel this is going to be like making a low here, especially next to these equal lows. Like this looks very obvious that they're headed down that way. We've had this in our crosshairs even as price was rallying up, right? We've been calling for lower prices. All it did was go to a premium, hit a order block, and then now it's came off the high. We have an inversion fair value gap here that you can mark out for from the weekly. So if price was to retrace, I'd prefer to not see it get above this inversion fair value gap, right? But my overall potential target, for me at least, looks like this could be in the crosshairs, especially if things continue to be the way that they are. And then obviously this going lower, or having an assumed bias going lower, has a direct impact on the DXY and what the indices could be expected to do as well. All right. So we have these equal lows here. We have consecutive up candles. If we go to the 2 week, we could see that there's also this order block. Okay, let me clean some of this up. All right, we've been calling for lower prices. This is a monthly low as well. And there's a fair value gap here, I believe, on the daily chart. Or one of the daily charts. So the 3-day chart. Okay, so it's a 3-day fair value gap. Right? So because it's been pretty bearish, right, it wouldn't be surprising if price comes back up into this weekly fair value gap to then position price or position smart money to take advantage of attacking the lows. So if price opens up on Sunday and goes up, right, and manipulates or whatever on Monday, that's what we want to see, because this is Sunday's open price here. So if price rallies up and we're bearish, that's ideal, because price goes up to go down and goes down to go up, right? So in this case, given Power 3 and how that dynamic works, again, if you haven't mastered Power 3, I highly suggest you go check out my Power 3 series, because this stuff will make a whole lot more sense, right? But I hope it makes sense for the most part, right? So Sunday's open prices here, anything above that, particularly at a premium array in a bearish market, would be ideal, right? Because Sunday, Monday in the weekly range generally acts as consolidation and manipulation. So if we're bearish, we want to see price go higher to start the week into a logical level. What logical level? This weekly fair value gap that we just looked at as an inversion fair value gap. So we want to see that act as resistance to then go lower, right? But if that doesn't happen and price just continues to pump lower, we have a beautiful order block here as well, right? So just note that real fast. All right. Change the color real quick. All right, so if price gets down below this, then we have even more reason to believe that, you know, price will continue, and we have a pretty obvious level of resistance just hanging out there, and all that is in line with what we've been assuming for the last month or so, or since May. The price will continue to go lower. Okay. So what are our objectives down below? Obviously, like we pointed out, these equal lows, the 3-day fair value gap, and then obviously the low down here. That's also something that's a little bit further away, but if, you know, price gets really excited, we could end up down there. But before we get down there, right, before we get down to any of these, you know, more lower targets like the fair value gap, the equal lows, and this deep low down here, we have multiple candles that we can use as liquidity. That being the previous day's lows, right? Like if we go to the daily chart, if price was to rally up here into this fair value gap and then drop, like we're trying to see, that we prefer to see, we would then have to look for our liquidity pools before we get down to these lows here in the fair value gap, because that's far away, right? And if you want to be able to participate on a daily basis, well, you know, for the most part, you're going to be able to see each daily candle has a high and low, does it not? So if this candle was to print lower, attacking this fair value gap or the lows down here, on its way to that, if price rallies up, you can frame a setup using previous day's lows and previous day's highs, right? Like I mentioned earlier. This is a discovery that you'll make when you study the previous day's highs and lows and London's highs and lows, you know, as you know, walk forward and do your studies. And if price is going to print lower, it's just very logical, and this is something people overlook all the time. It's very logical that the previous candle, in order for this next candle to go lower and attack that, it has to break the low. So being that is the case, and every time a candle that's printing to go lower has to break the previous candle to go lower, obviously previous day's low in a bearish market acts as a continuous, reliable liquidity pool that you can seek on a daily basis, because there's always a daily candle, right? There's always a previous day's high and low, right? There's always a London's high and low, right? So study how, you got to go back and get some examples of this phenomenon and how price uses previous day's highs and lows before it gets to, say, a longer term target, which could essentially be the next couple weeks narrative, right? Your daily bias and narrative are different. So your narrative may be, okay, it's going lower to get down into this fair value gap, but your bias can use things like, you know, more near-term targets like previous day's highs and lows, and London's highs and lows. And there are obviously like a good amount more liquidity pools that you can pay attention to, but just this here is very effective, right? And you'll be able to get a lot of information from studying how the previous day's highs and lows are used as price prints to a higher time frame objective, and then how the London high and low is used within that daily range on its way to that previous day's high or low, right? So definitely go check that out, right? Go dig into your studies and see what you can discover looking from that perspective. And if you have questions, obviously let me know in the chat or in the comments after this video is posted. and I'll be happy to do my best to help you out, right? But yeah, so again, the overall narrative, like we talked about, is bearish unless something changes. Again, we do have SMT at the lows here. So what invalidates my interest to go lower? Well, to validate and invalidate particular price structures, a very simple way to do that, or employ a process behind that, to validate or invalidate something, you want to look at where price is currently at and what 3 PD arrays are above current price action, like the current price. So if you look up, like we pointed out earlier, there is a weekly fair value gap, right? A weekly inversion, a bearish inversion fair value gap. Okay. We also have, here, let me just label this real fast. Right, so if we move up, right, we have a fair value gap here as well, right? We just scrub up and just continue to observe what is in this area. We have an inversion fair value gap here as well that we got below. So we're below 2 inversion fair value gaps. That is showing nothing that has to do with being bullish. So trying to think we're bullish is foolish. Even with the SMT there, you have to have something providing evidence that in the price currently it promotes that idea in terms of a particular direction. This is promoting, in my opinion, and has been promoting bearishness, which obviously, again, will impact the DXY and push more interest to the downside. Okay? So yeah, the weekly fair value gap here, we have that inversion fair value gap over here I pointed out. We have an order block here, so if we get above this high, that's already 3 PD arrays broken. So that would completely negate anything that I am thinking in terms of price continuing to go lower, and I would start considering, finding different pieces of information supporting a reversal from this SMT, right? The SMT being one of those. So if SMT happens here like it is, and then it runs up above this high, taking out this weekly inversion fair value gap, maybe even getting above, this weekly fair value gap, showing respect to these down candles, right? Maybe bouncing aggressively from here, right? All of that, having no resistance, taking this high, again, would turn my interest to a whole lot less likely to go lower, right? Be more leaning towards, okay, what can I figure out, and what else can I layer to promote price turning around in a reversal? But again, if that doesn't happen, what do? We stick to our bias. Our assumption, like I said before we move forward, for this market has to do with price coming back, at least in this one, coming back into this weekly fair value gap to set up a bearish power 3 above Sunday's open price, which is what you see here. It's the start of the new week opening gap and Sunday's open price. Or that's Friday's close, actually. So Sunday's open, when it comes out, it'll be obviously in this vicinity. So getting above that for Monday's price delivery is what I want to see. Another thing I can mention about liquidity targeting and just navigation, when you're trading on Sunday and Monday, you want to make sure you're also labeling Friday's high and low, because Friday's candle, before we get to any other PD array moving forward from where we're at, Friday's high is here, Friday's low is here, right? So the next candle that opens is going to work inside that range. And just like the idea we talked about with the previous day's high and low, if price is going to continue to go lower, it's going to have to pretty much take out the low from the previous day. It's the same with Friday's high and low when you go into Sunday and Monday trading. I don't trade those days generally. I don't like to. I like to let price set up. But if you do choose to navigate in that time on those days, you want to consider what I'm saying here. Look at how Friday's high and Friday's low are utilized as you move into a new week every week. right? And then again, study previous day's highs, previous day's lows, and then also study London's highs and London's lows. See how those things are used to either set up particular ideas or see how they're used as targeting on a day-to-day basis. This is something that is so, it's, in my opinion, I hope for you guys as well, it's something very simple to see in terms of targeting. And you could frame a whole model around previous day's highs and lows, London's highs and lows, Friday's highs and lows, so on and so forth. Right? And you could just navigate in that little corner of the market, and do very well because it's very consistent. It's something that happens every day. There's a previous day's high and low every day, unless there's going to be no more days, right? It's kind of similar with the weekly highs too, the weekly highs and lows, as well as the monthly highs and lows. Of course, those take a little bit more time, but everything you discover on this daily chart will be helping set up the narrative for the weekly and the monthly time frame objective as well. And if we're on our way to a weekly low or fair value gap, the previous week's lows, when price gets to there, once it attacks there, it's going to have to take those levels out as well. So again, you can use them as targeting frameworks on your way to a particular level. So what if price aimed for this low and turned around and then just, went higher, but it was able to take out this low? If you were so demanding to attack this higher time frame, like more longer objective, you wouldn't be able to have confidence in entering. This idea and perspective while looking at previous day's highs and lows, previous week's highs and lows, London's highs and lows, and and Friday's highs and lows, your view looking at these liquidity pools like the way I'm describing here, it supercharges the amount of opportunities you're able to see and trust, right? And for some reason, it's something that goes over people's heads. I know it went over my head. I was trying to figure out, I think it was because I was trying to figure everything out at once when I was new, But now looking back, 4.5 years later, I could see where I overcomplicated the crap out of everything, right? And it's you don't have to know everything. I don't claim to know everything, but I do know what works for me, and I figured out what works for me, and I found foundational things like what we're describing here that just help anybody supercharge their navigation skills, which obviously is another step forward to clarity. And then after clarity, depending on the trader and how they operate, could lead, possibly, no guarantees, but could lead to profitability, right? And consistency in your results. This is a consistent phenomenon, consistent liquidity pool, and it's always going to be there unless there's no more days in the world, right? So you don't have to ever think, oh, well, maybe it's not going to be there. There's always a high and low from the previous day, right? And again, there's more to the list, but the ones that I've given you in this video are plenty for the time being, right? And for you to go and apply in this coming week. Okay, but yes, so again, we are looking for the yields to continue to promote potential downside. Let's go see the 2 and 3 day. So we have this up candle here. Maybe we can also drag that out. I'm not going to put it there because it might be a little too busy. I don't it's already busy enough. But yeah, so there's that up candle. And that again, when price opens up here, when it rallies up, it's just another key that we can see, or another point of interest that we can key off of to help assist us in trying to trust that this is going to act as resistance. And then if it breaks, if it just smashes through those levels that we mentioned earlier, right, the weekly fair value gap, the inversion fair value gap, the order block, I believe on the daily chart, right, and then this high, right, just this weekly fair value gap, this fair value gap, order block, and this high, if those break, that's enough for you to be invalidating the fact that price is trying to go lower for the time being. All right? So again, why are we spending so much time here, right? Like why is this market and the bonds worthy of our time, right? because these impact your trust. They impact the consistency or strength or weakness in a particular bias, right? When it comes to DXY and the indices. Okay? So yeah, that's pretty much all I have for the yields. Again, if you have any questions watching this replay, definitely let me know in the comments, and I will clarify as best as I can. And if you get value from this video, definitely, or any of my other content, definitely leave a comment, like with your thoughts and stuff, and then definitely subscribe to the channel so you don't miss another video. I go live weekly and just provide value. You know, every time we get on, there's something to learn. So, and I appreciate those of you that have supported me so far and continue to support me. You guys are a blessing. So yeah. I hope this market makes sense. So let's move on to the next one. Okay. So now we got the bonds, right? So the bonds are going higher. If the yields go lower and the bonds go higher, that promotes bearish DXY, bullish indices, right? And if you look here, it looks obviously like things are going to continue rampaging to the buy side. Right, we'll see if it is going to continue as we move forward into this coming week and the weeks after that. But for now, we could see how there's an order block here. There's an order block here. Right, we've set equal lows here, so it is kind of suspect. But we also have equal highs here as well. So if the yields go lower, I want to see this go higher if I want to see bearish DXY and bullish indices. I'm assuming that we're still going to be bullish for the indices, which we'll get to in a second. So what invalidates that? Right? We have this order block here. Right? So that's something that I want to watch. So weekly order block. It's like it's a 2-week order block, but I mean we just leave it as that. It's still a weekly order block, right? So I got these equal lows here. All right, so yeah, and mind you, we've been calling for this to go higher for since price was down here, right? We've been calling for this to go higher for such a long time, not only daily in my private community, but also here on YouTube. If you go back and if you've been paying attention, which I highly suggest you do, you'll see that we've been in line for the most part for a pretty long time, right? I'd say like 3 months almost straight, knowing what the narrative is. Obviously there's some days that were a little bit harder to read, lower time frame wise, but nonetheless, everything has always in this 3-month period come back to the overall narrative we've painted based on this analysis, right? And the bias for this and the yields carried over to the DXY and the indices, and we've been able to really take advantage, right? Both live here and in my private community. But yeah, so we've fulfilled this. Again, I wouldn't be surprised if this retraces to go higher, right? I wouldn't be surprised here as well if this retraces, leaves this equal high situation, declines, reaching down for a particular level to then look to rally up and then fulfill and finish the rest of this fair value gap. Okay, so that's my assumption. Again, what invalidates that? Well, there's a fair value gap here. When price opens the next week, tomorrow, it's going to have a new candle. So that'll mean this creates a fair value gap. So price has already taken highs. So since we've taken liquidity, we'll now look to likely seek inefficiency, right? Or an order block or some form of a discount array that's internal range liquidity. But if we want to see price go higher, that is a phenomenon that happens over and over. It goes from stops to inefficiency, right? And then in that price leg, to invalidate the continuation of that same narrative or bias or whatever you want to call it, it's going to have to break 3 PD arrays, right? This is the most simple way to try to validate and invalidate something in terms of bias, right? There's more to it, obviously, but this is a very, very easy, simple way to do things, right? So sorry about that. Yeah, so keep that in mind as you look to move forward and do your analysis. 3 PDA rule, always start from the higher time frame. And yeah, right, so that is what I want to see. That is in line with this also opening up and going higher for a little bit above the Sunday's open price to then tank and go lower, right? So this going lower, the bonds going higher, that equals higher indices, lower DXY, okay? And the 3 PDAs that are here on this time frame, right, are pretty far away, right? So it's like these consecutive down candles, I'm assuming, yeah, they are an order block, right? On the 2-week chart, we have a fair value gap down here. We have the midpoint of that weekly fair value or that weekly order block, right? So I will continue to trust this being bullish just like I did all through here, as long as we stay above the midpoint of this weekly order block here. See? So if we were to break down through that, that'd be having me question and probably look and assume the price is, potentially going to reach down and turn around and aim for here. But again, on its way to this, like we talked about with previous days highs and lows and that whole phenomenon, if that is something that proves to be of interest, then price would have this weekly low here. It'd have this weekly low here on this candle, the wick here, break that down into quadrants. We have the 25, 50, 75, and 100% of that wick. So all those will be targets. And then obviously, if it's headed down here, all of those become part of the navigation of liquidity, right? So I hope that makes sense. That's what I'm looking for. So I wouldn't be surprised if price retraces to start the week. Again, this is Friday's candle, right? So Friday's high and low, moving into Sunday and Monday, will be important to observe. Okay? So yeah, and if you guys got questions, let me know in the comments. I'd be happy to answer your questions. But moving along now, right? So now we got the NASDAQ, right? The NASDAQ has come down into a fair value gap, right? We called this retracement. We said that this is likely to occur, especially because this happened on, I believe this retracement happened on a Thursday, if I'm not mistaken. I think it happened on Thursday. Yeah, see? So price was bullish. It's been bullish. Went into Thursday. Thursday generally creates a retracement. So that's what price did. Now price has come all the way back up to this order block. So just like how our validation invalidation process was for the bonds and yields, a similar tactic will be used here. Okay, so we have a fair value gap in here. We have this order block in here. If we break through the midpoint of this order block and this other fair value gap as well, those are three PD arrays broken. So then I would start considering price turning around and coming possibly to this level. Right? But again, if that doesn't occur, I'm going to continue to press on. We don't pick tops. We don't pick bottoms. We make sure that we use what price gives us in that moment. Okay, so right, so we got sell side liquidity here. This is Friday's high and low. So going from Sunday to Monday, going into Tuesday, we have to observe Friday's highs and lows. If price does end up looking to continue bullish, which I want to assume is going to do that until something changes, that being the midpoint of this order block I just pointed out. Let's go label that just to have it up. All right. So yeah, this would be pretty much when I would start considering, okay, maybe something's changing, and then we'd obviously do a deeper analysis on the fundamentals and across the other indices, or across the indices plus the other assets, to see if there's anything that's changed. But unless something changes, nothing changes. Nothing, right? You stick to your bias, or you stick to the narrative until you're proven otherwise. Because if you just flip-flop back and forth like a fish, okay, and flop around, you're going to get destroyed. And you're never going to be able to be like confident when you get in, and you're going to think or feel like things are random, and you'll just have inconsistent results, right? You got to realize that narrative doesn't change a lot. It doesn't change every week. Bias on a daily basis does sometimes, because in a bullish narrative, sometimes there's a bearish bias, right? Reaching for things like fair value gaps to set up further runs. So I'm assuming until something changes and 3 PD arrays break and the other assets look like they're going to oppose this view, I'm going to continue to stick to price going higher and finding things that outline that specific delivery and price, right? Obviously, part of that has to do with this order block here, right? We got this high. So we got this high of the order block. Right. So yeah, we got this daily order block as well. So we got fair value gap, daily order block. Midpoint of this order block is where the invalidation happens for bullishness. Okay. So yeah, that is essentially what I'm looking for. If I want to see the yields rally up and manipulate before it continues lower, then I also want to see this do a similar thing. I want to see this reverse to go higher, right? Maybe we can come down, sweep Friday's low, maybe fulfill the rest of this fair value gap, push a little deeper into this order block, create the low of the week for power 3, then go higher, right? I would love to see that happen. That's what I would like to see, right? So going into the week, that is what my overall assumption is and what I want to see in price. And if everything falls in line and that's delivered like that and shows that that's what price wants to do, then we should have a pretty interesting time attacking that specific narrative. So yeah, if we go flip around and look at the indices, right, we can see the S&P left equal highs. It's come back into the fair value gap. I got a similar idea for the S&P. We have an order block here, fair value gap here, right? So I'd love to see price retrace a little bit, come down into this area here, getting below the Sunday's open price, below the new week opening gap, attacking Friday's low to set up possible run, a possible run on stops, right, to position smart money, to then just continue pushing higher, right? And again, we want to observe how price utilizes these 3 PD arrays that are below price, right? If we move up, we have this fair value gap, that order block, right? And then we also have this swing low here that can also be observed, right? But before price even gets down to there, if we show zero respect to any of these fair value gaps and it just slices through, then obviously price wouldn't be ready to kick back in line. And we'd have to see if something changed across the assets, right? But again, I'm going to repeat this again for good reason, right? Nothing changes unless something changes, right? So you stick to your narrative until it's totally proven otherwise. Part of that process of validating or proving, it's either valid or invalid is 3 PD arrays down below price and watching how those levels are respected. All right. So yeah, that is my analysis for basically the S&P and the NASDAQ. I'd like to see how we respond here. If we could drop down below Friday's low, take that out, and then position deeper inside that fair value gap, deeper inside the order block that we looked at, and then give us a nice push away, preferably around one of these news events. That would be ideal. Okay, so moving along, go to the 3 indices. Right, we can look at the highs here. We observe the highs. Right, we do see that there is an SMT here bearish, but again, I don't even know if I've talked about this on this YouTube channel, but to validate an SMT, say there's for example, this bearish SMT here, right? How do you validate that or invalidate it? You have to use the DXY. If there's a bearish SMT at a particular level, you have to have the DXY backing you up, especially on these higher time frames, because if you don't validate it this way, you're just guessing, right? Because SMT happens constantly, over and over, all day long, especially on the lower time frames. And if you're trying to figure out which SMT at a particular moment should be valid, like if there's 2 of them, the way you justify one or the other is by using the DXY. You can also go as far as using the bonds and yields and see how their behavior is acting in that particular scenario. And then you get a much more clear picture in terms of figuring out which SMT is going to work over another when there's multiple in the same vicinity. All right, I don't think I've mentioned that here on this YouTube channel, but there you go. Right? Just go back and back test that. Same with the situations or the topics I talked about earlier with the previous day's highs and lows, London's highs and lows, and that like the previous week's highs and lows. Do a drill or like a study on your own about what those levels do. How are they used from a lens of Power 3? How are they used in the weekly range, in the daily range, on a day-to-day basis as you attack a particular higher time frame level? Right? Again, remember the economic calendar, right? It acts as a macro. The economic calendar is essentially macros for the higher time frame, right? It works in a similar fashion as the other like macros on the lower time frames that we use for entry, but the economic calendar for the higher time frame is essentially the macro for that perspective as well, right? So all these things that I just mentioned, you're going to want to backtest, right? You're going to want to study them, because I'm hoping that most of your guys' objective when you come and watch these videos or support the channel, I hope your major objective that you have is to gain clarity, because clarity comes before profitability. Clarity comes before consistency, right? Because if you're not clear, how the hell are you going to profit? And then how the hell are you going to be consistent, right? So yeah, right? Keep that in mind every time you watch this. Figure out which piece of information you can use to help guide you to clarity, And then if you ever, again, have any questions, let me know. And if you get value from my content and support what I do here, definitely subscribe to the channel and like the video if you have gotten value, right? And we go live 1 or 2 times a week. So definitely turn post notifications on so you don't miss when I do go live, because a lot of times my subscribers miss the the lives when I go live. They don't get the notification. Right? So yeah. Looking at everything, I hope so far things have made sense. Again, just to review, we're going to look for price to go lower on the yields. Lower on the yields, and then higher in the bonds. And then that should lead us to a lower DXY and bullish indices. Right? That's all. Look, when you take that and you go to the higher time frames here, you can see how that picture starts to seem pretty clear in terms of this holding for the bullish narrative. And if any of those things change, then obviously the narrative may change, right? Sometimes it takes a new quarter for an overall narrative to change. You can have a whole quarter that's bullish with some retracements, which I think happened this year, and it also happens on a year-to-year basis. I've done a bunch of back testing from the last 10 years and figured out that this is a phenomenon, right? The trend for the most part, long term, it doesn't change, right? Bias, like you shouldn't be flipping back and forth every 5 seconds. If you are, you're like in serious risk of over trading and over leveraging and just doing way too much, right? You want to make sure that your risk rules keep you out of trouble, right? And part of that has to do with putting limits, and it goes deep with risk management. We could have a discussion about that at some later time, right? But yeah, I hope most of this stuff has made sense. There's not really, in my opinion, much more to discuss. If you are on this live and you have questions, let me know in the chat so maybe we can talk about some questions you have. If not, I will probably end the stream in about 5 or 10 minutes. I'll just probably do a double check to make sure that we have everything we need to go into the new week. And then you guys can go and enjoy your weekend. And all of you guys that have hopped on this live today, I appreciate it and hope you got value. And let's have another amazing week, right? So yeah, let's go to the monthly real fast. Let's see what the monthly chart looks like. So that's interesting. So if we look at the monthly chart, we could see a monthly SMT. Oh, that's on the weekly too, huh? Yeah, so take this into consideration too. So if we do start seeing things turn around, this could also be a possible indicator that prices may be going to start to seek lower prices. But again, until something changes, nothing changes. All right? Oh, I think we did point out the SMT, but it was just like right here. But yeah, so keep that in mind. But because we don't have any questions from you guys, I guess we will leave it here. Again, don't ever hesitate to ask questions. Turn post notifications on so you don't miss my lives when I go live, so you can be here from the start. Because generally the first start of the calls that I have, the live calls, it's always explanation to get a feel for what we can expect, for the session and what the narrative is, and so on and so forth, important key levels. So I don't want you guys to miss those points because it's very important to get your footing. All right. So yeah, definitely enjoy your weekend. And again, if you have questions, let me know. And I will see y'all on the next one.